Hello again, this is Alex with MasterChartsTrading.com, and today is Friday, April 6, 2018, and this is an update on the state of the stock market and various other markets. So pretty straightforward as before. We're looking at stocks, various stock funds. We'll look at the China and United States trade war as it escalates, and we'll look at the Chinese stocks also. During the true bear market, there is really no place to hide in stocks, and I'll show a 2003 example of utilities. We'll look at bonds, dollar, and today I was asked to do a US dollar versus ruble, and so I will do it. Gold miner still indecisive. Oil is kind of, I would caution on that. And natural gas still bearish, and cryptocurrencies are chasing each other to the downside. Right, let's start with S&P 500. This is S&P 500 mini futures. So most of the charts I will be showing today are going to be on a daily time frame, like vast majority, 99%. So I'm just going to stop saying that we're looking at a daily time frame, because this is all going to be on daily time frame. Also, additionally, these four lines on the chart, this green, blue, red, and yellow lines, are available for you if you sign up at MasterChartsTrading.com, and you can have it on your interface, on TradingView interface. So ask me how to get those. Looking at S&P 500 mini futures, here we see a relatively clear resistance at 2670. You can see that we broke below this level on the 22nd of March. We tried to rally above it on the 27th of March. We again tried to rally yesterday on the 5th of April above that level. Once again failed, and today we got a lot of selling. So far this level is acting as resistance, and you can see that before it was acting as support right there on the 1st, 2nd, and 5th of March. You can see several lows being made around the area of this support resistance blue line. So right now it's possible that we're seeing resistance here, and we can zoom into, let's say, 4-hour charts on S&P 500 futures, and you can see if I'm looking at this chart purely and not knowing anything about it, I would be treating this particular chart as a bearish chart on a 4-hour time frame, and I would be shorting it. So where I would be shorting it, I would be shorting it at the red line. So here's one on the 29th of March. There are several other places you can short, and I would put my stop above this blue line at 2703. Now again, intraday charts are notoriously more difficult to trade than the daily charts, so if you are so inclined, you can trade intraday charts with my indicators, but the results most likely will be worse, because daily time frame you have just a little bit more advantage than the robots, because on intraday it's a domain of the robots, and lots of intraday trading is done via automatic systems. Nevertheless, this particular chart looks like we may retest again the support, which is currently at 2531.25, and you can see it basically was there as long as the 9th of February of this year. So it does seem plausible that we will retest this low at 2531. Overall, this chart is still bullish for multiple reasons, and I would still continue looking for long opportunities, or in other words, I would be buying with it, with the hope of it of my position going higher, versus shorting with the hope of my position going lower. So this particular chart still looks bullish, and I would not yet attempt to short it. In general, it is more difficult to short equity, to short stocks. And of course, S&P 500 mini futures are futures of stocks. We can trade it on the retail level with a retail ETF named SPY, SPY. You can see also very similar resistance pattern here at 266.33 resistance. So we have a minor support break here on the 22nd of March. Resistance, or the price coming up to the broken support on the 27th, and there was resistance manifested itself. And yet again today, yesterday on the 5th of April, we see resistance at this level. So far I'm still seeing resistance for SPY at this blue line here. Dow Jones, DIA, basically similar pattern, slightly stronger. You can see we had a close above this blue line. QQQ, NASDAQ, similar pattern, close above this blue line, so it's slightly stronger. Here what I wanted to show was the volume patterns for QQQ, and why I think we're not yet done correcting, because usually, but not always, QQQ, the NASDAQ 100 ETF, here is the QQQ, usually the volume spikes at the lows. So for example, here is a perfect example. In early February 2018, you can see really dramatic volume increase over several days. Volume in 100 million shares on this early February plunge, and then we had a hammer candlestick and a rally. So basically, the volume did indicate that this was it was a pretty reliable indicator that we're seeing a low here for QQQ. Notice right now we don't have that big of a volume yet, so I think QQQ could continue lower, possibly to at least retest the February 9, 2018 levels, so that could be around 149 or so, but possibly even lower to this red support line, which is currently at 147. Whether or not any of this will happen, there's no way to know that. We are simply betting on probabilities, and currently I'm betting on a probability of continuation of a bull market, because I don't have enough evidence to suggest that we are seeing a bear market turn into a bear market. So right now I'm still seeing a bullish market for stocks. Okay, so we can look at transportation average, which kind of worries me. So here's IYT, which is a Dow Jones transportation average, or iShares transportation average ETF. Notice similar pattern. We have a minor support break here on the 22nd of March. Couple of attempts to rally, and again rejection. But additionally, we made a lower low relative to at least going back to the February 12th. So this particular chart kind of worries me, and I think we could easily see a continuation lower to at least 176. So I'm a little bit hesitant to recommend any transportation stocks currently, especially after this latest selling. Biotech, I actually have a position myself in Biotech, and I thought we bottomed here on the 28th of March, and I myself opened at, here you can see at 87.43, and it's really not going my way. So you can see it's kind of selling off fresh. Let me see if this is a low. So low of 82.36 here, and a low of 82.38. So we actually made a lower low here. So yeah, XBI Biotech could continue possibly to like 78 area. But still, this is a bullish chart. I would not short it. I would short this chart if we break below this yellow line, bounce, and then I would potentially short it. In fact, I'll show you a trade that I just did with inverse bonds, and this would become quite obvious. So Biotech, you can see XBI below this blue line here, which is not a great sign, but not the end of the world. But here's IBB, the other biotech fund. You can see that it is really approaching this yellow line, and just generally speaking, the yellow line here, I would consider the bearish levels, and I would either avoid it and potentially short it. So we will see if XBI or IBB is correct. We'll see which one is correct. And then XLV, okay, so it's XBI's biotech is weighing on healthcare SPDR. You can see quite a bit of selling for healthcare. You can see we close below this red line. So to me, this is caution, and this is what I send to my subscribers: caution. In other words, if we get more substantial downside, especially if we close below 76.28, below this yellow line, I would avoid this one as well. And here's utilities, XLU. So if you are a relatively advanced trader and you know how to trade options, you could short XLU via options. And this area, right now I think we are coming to that place, price and time where utilities could potentially be shorted, especially if we make like a slightly higher high above this red line, $51 or so, and then we get a lot of strong selling. Then we could look for a short entry for the utilities. I think this is a bearish chart. The reason being is because we got this breakdown here on the 1st of February or 2nd of February, continuation lower. Now we're just simply seeing a bounce, and this is kind of like a dead cat bounce basically. So I would consider shorting it, or definitely just avoid it for now. If or when we kind of get a push higher to maybe like 53.50, then we will reconsider utilities. But for now, I would just avoid them. Okay, let's continue with our agenda, and we'll look at China versus USA trade war with a new sanctions, with the new tariffs from both countries going into effect. What is it doing to the stock markets of both countries? So here's FXI China. This is a kind of like a proxy for the Chinese economy, large cap ETF. Here I still see a bullish chart. These are fresh highs, pullback. You can see the similar pattern to stocks, and as I keep saying, stocks worldwide really have a very high correlation to other indices. So indices in United States versus Europe versus Japan or China, they kind of move together in lockstep. So if one goes up, the other one goes up. If one goes down, the other one goes down. So it's a normal correlation, so to speak. So here's FXI China on a daily time frame. You can see that we're trading below, again, also trading below this blue line. We're making relatively like lower low relative to the March 2nd low right there, and April 4th. So right now I'm seeing selling pressure, but the chart itself is still bullish, and I would continue to look for buying opportunity. If we do sell off to below this red line, and that would be a big caution definitely, and especially if we close below this yellow line, which is currently at $40, then I would definitely avoid this ETF. So the trade war or the tariffs are, not helpful, obviously, to this chart of Chinese stocks. Where this will go, nobody knows, and really nobody can say where the stock market will go. We can only bet on the possible outcomes. And right now, I think that this still is a mildly bullish chart, and I would look for buying opportunities if I was trading it. So versus United States, S&P 500, you can see a relatively similar pattern. You can see we're also trading below this blue line. So both countries, I think, are being hurt by this trade sanction, trade. I'm sorry, not sanctions. The trade tariffs. Overall, I would still look for buying opportunities, but again, if we get further downside pressure in price, then potentially we can avoid these ETFs. Okay, during the true bear market in stocks, there is no place to hide, and this is what I mean. Let me show you what I mean. So once again, correlations between various stock funds are very high. Here we have, on this chart, we have 5 different funds. We have S&P 500, real estate in yellow, XLE energy in green, XLP consumer staples in purple, and XLU utilities in orange. And overall, visually, you can see that they are these funds are sort of moving in lockstep. On occasion, we get uncorrelated or poorly correlated readings. For example, here's energy XLE. Just a few months ago, it was really strongly uncorrelated to the general market, but now it's again correlating. So overall, let's say there's going to be a new bear market. Let's say like we had in 2001 to 2003, or a similar bear market as we had in 2007, 2008, 2009. All funds, all stock funds will get sold. And really, there is no way to say, oh, but I'm going to just be buying utilities because they are sort of defensive, or I'll be buying staples because they're sort of defensive, or I'll be buying real estate, or maybe I'll be buying energy. Really, no way to hide in any of the stock funds during the true bear market. So what do we do during true bear market? We just exit. It's that simple. So for example, here's utilities, XLU, and here when I said avoid, basically in early February of this year, 2018, I'm looking at this fund and I don't like it, so I'm just simply not going to own it. So this is my way of thinking, and what I wanted to show here's utilities, and this is from 2001. You can see that the chart, we had a break below this yellow line here in September of 2001. And then we had a small bounce, but eventually we had a lot of selling, and this particular fund, XLU, lost an additional 43%. Now, again, we don't know what's going to happen in the future, and here is the current chart of XLU, and here in 2018, on the February 2018, we have this bearish break. Here in 2001, in September 2001, we have a bearish break. Will we get a similar pattern currently to what we had in 2001, 2002? There is no way to know that because we do not know the future. But again, since we're doing trend trading, we're betting on the continuation of a trend. And when we define a trend, for example, as in utilities, we're going to say that the trend is a bearish trend is a close below this yellow line. And we're going to say that we're going to think that we're going to continue lower from here. So as an illustration to the general, the current market. That once again, there's no way to, during the true bear market, there is no way to hide in various stock funds. The best thing to do is to simply exit all your stock positions and just sit there in cash or potentially in bonds. But we'll get to bonds in a second. All right, let's continue to bonds, and here's TLT, the Treasury Bond Fund, long-dated treasuries. On the here, what I see on this chart is a bearish security. Why? Because we had a close below the red line. In addition, we had a close below this yellow support line. So definitely bearish currently. I would look for shorting opportunities. In fact, I did short TLT here on the 3rd of April via TBT, which is an inverse ETF. It was a successful trade. Unfortunately, I got stopped out. We'll see if I got stopped out. I mean, I made money basically. I entered here on the 3rd of April. My target was relatively tight, and I sold 1/2 of my position at my target here. And then I moved my stop to entry that same date. And then today, on the 6th of April 2018, I got stopped out at my entry. So overall, I had half my position at decent profit and half my position above cost. So overall, it's still a profitable transaction. Now, TLT, you can see here, it went in my favor. In other words, I shorted it here, but now it's really bouncing, and I wonder if maybe this, run from the lows in late February is not yet done. Maybe we'll continue higher. If we do continue higher, then we'll look at the price action and act accordingly. LQD, here is the investment grade corporates, also bearish, weaker than TLT. So, but I'm just basically avoiding corporates altogether. Junk bonds, here junk bonds, JNK, also bearish, approaching February lows, kind of making this fresh lows here below this yellow line. So I would definitely avoid it, potentially short it if you're so inclined. And additionally, junk bonds correlate highly with the stock market. So once again, I wonder if the weakness in junk bonds is something to be concerned about for the stock market. Right, let's continue to the Forex universe. So here is a US dollar index, the daily time frame. Again, these four colored lines on the chart could be yours if you sign up at MasterChartsTrading.com. I can walk you through how to get those lines on your chart. I use them as support resistance lines. These are my calculated lines. So currently, what I'm seeing with the dollar, there's a possible bottoming action, but we obviously cannot know for sure. But it sure looks like dollar kind of wants to go a little bit higher from here. So for example, here is euro versus US dollar. Euro is pretty clearly in a bullish uptrend. Now, ideally, if euro breaks this support level, which is currently at 1.22420, this green line, then a trip to the blue line, which is at 1.1853, is not out of the ordinary. And if that happens, the dollar index will obviously gain, and I'm estimating it might go as high as 92 here. British pound versus US dollar, similar pattern to euro, kind of trying to bottom around the blue line, green line, but I think it might go lower to the blue line. And again, if that happens, then we can see a strengthening of the dollar index. Here's US dollar versus Japanese yen. You can see a sizable rally here from the lows at 104.5 to the highs at 107.4. So it's pretty sizable rally. In other words, US dollar is winning the battle. So again, it's helping the index, the overall dollar index. This still looks like a bearish chart to me, the Japanese yen, US dollar versus Japanese yen, but again, if the other currencies reverse, then I think this chart should reverse as well. So let me look at the Canadian dollar futures before I show you my recent entry. So Canadian dollar futures appear to have turned bearish on the 16th of March, right there where I'm hovering, with a close below this red line, red support line, and now a rally. So the risk right now is very low. The risk is basically, from the price, which is currently around 0.783, to this blue line, which is at 0.79. So there's not a lot of risk here, but the possibility of reward could be quite nice. So what I did is I went ahead and I opened US dollar versus Canadian dollar on the long side, and I opened it on the 5th of April of this year, 2018, hoping for it to go higher. Notice that my stop is very close. I just need to close below this red line, and I'll be out of this trade. It's possible that the Canadian dollar is the first to reverse versus the United States dollar. Another one that is under pressure is the Australian dollar, so AUD USD, very close to bearish levels. Look at Australian dollar futures, see if there is anything different. No, it's similar to the AUD USD. So I'm basically waiting for a break below this red line, which is currently at 0.76312. If that happens, then we can potentially short this one as well. New Zealand dollar versus US dollar, still bullish, but I think again most currencies move in tandem versus the dollar. US dollar versus Mexican peso. For now, the Mexican peso is winning the battle, but again, if other currencies turn around, I don't see why it shouldn't turn around for the Mexican peso as well. So overall, there is a strong probability now that dollar would rally to maybe 92 or so, and this would weigh on precious metals, which I'm going to go over next. So here's paper gold, XAU USD. For now, it's still a bullish chart, and it makes sense because the dollar is, near the lows. Here is the gold futures. And again, trading near the highs here. What worries me about gold complex is, of course, the gold miners. So here's GDX. You can see that the breakdown occurred on the 27th of February 2018, and now I'm just very indecisive about gold. I'm basically avoiding it, and I'm avoiding all gold miners and gold itself because I'm not really sure what is going on. I got gold trading near the highs. I got gold miners trading near the lows. Here's gold miners. Here's the junior gold miners also trading near the lows. So not a clear picture, and when something is unclear, it's probably best to stay away from it. So once again, if the dollar strengthens further, and you can see this is XAU, which is gold, versus USD versus United States dollar. So if US dollar strengthens, and in this case US dollar is in the XAU slash US dollar, so it's on the bottom, and US dollar will pull this price chart lower if US dollar strengthens. So it makes perfect sense. If that didn't make sense, then call me, or rather email me. Right, US dollar versus the ruble. US dollar ruble. Here is a chart I have not covered in the past, but overall, on this chart, the ruble was winning the battle. If we get a close above 58.80, I would think that we're now in a bull market for US dollar versus the ruble, and we could see US dollar get even stronger. Maybe it will go higher to like 60 bucks per ruble. I don't know what else to say about this chart. Here's RSX, Russian stock market. Similar to most other stock markets of the world, we came down from the highs that were set in February here, late February, and came down. For now, it still looks like a bullish chart. RSX is dependent on oil, and there's lots of oil-related issues in this ETF. So let's go on to oil. So US oil, here's a CFD that you could trade. Yes, today we got quite a bit of selling here. It's still a bullish chart. In fact, we did a trade at MasterCharts Trading. Here is USO. Alert was sent here on the 13th of March. And you got a very nice gain, as much as almost 12% gain. So hopefully you took the trade. Right now I'm reluctant to enter on the long side. I want to see a deeper pullback for USO and US oil. So maybe a pullback to around this blue line, around 50. Now, if we get a pullback of that magnitude in oil, then here's light crude oil futures, and if we get that magnitude pullback in oil, we could see oil drop to like 57.40 or so. Many of the oil-related plays, like for example here's XOM, ExxonMobil, under severe pressure. Look, this is outright bearish chart, ExxonMobil. If oil weakens further, I guarantee you ExxonMobil will follow. CVX, similar, under severe pressure here, cautionary. This is a very cautionary kind of stock. I would just watch it and see if we get a breakout or breakdown. And of course XLE, the ETF, energy ETF, and I'm warning my subscribers, caution, caution. So not a great chart currently, and again, if oil, and it's very possible that oil will weaken further, at least a little bit, and this could push XLE in an outright bear market, especially if we close below 64.58, which is this yellow line. And again, you can find out about those lines by contacting me. So overall, oil is in a bull market, but the energy ETF is looking kind of bad actually. Solar looks okay though, so that's another energy source, and of late it's becoming more and more important. I had a position myself, closed it at a nice profit. Several alert was sent here on the 6th of February. A nice gain here. So energy, solar energy definitely looks better than conventional energy. So you can see significant difference and divergence. You can see the XLE is trading on the lower right, while the solar 10 is trading on the upper right here. All right, and let's look at natural gas futures, and G1 exclamation point on TradingView. If you don't have TradingView account, you can get it for free at TradingView.com, and then you can have these indicators as well. Just contact me. Excuse me. Natural gas looks bearish. If I was an aggressive trader, I would be shorting it, and you can see here's a couple of trades, and this latest one On the 29th, if you opened, you could potentially already make money here. Excuse me. So natural gas bearish, but me personally, I would like to see a bigger bounce. So if I was to short, I would probably short around $3. And finally, cryptocurrencies very briefly. I will review cryptos or Bitcoin versus US dollar. Please don't think that Bitcoin is some sort of an investment vehicle. It is not. It is a trading vehicle. So traders will, traders really don't care. They just look at the numbers and the lines on the chart and say, okay, is this going up or going down? I think currently Bitcoin is going down. So I would be shorting it. So for example, here was a couple of potential trades, and latest one really worked out really well on the 21st. Or, we had several days here to enter on the short side and a big drop, 25% drop for Bitcoin. I think it's probably going to continue lower to 5,499, possibly lower. It's in a bear market. Bear market started here on the 4th of February with a break below this red line. It's pretty straightforward. You can see before we were making higher highs and higher lows, and we would have made, finding opportunities to buy around the blue line. For example, here's one in 2017 in September. And then you can see a bunch of arrows here where good buying opportunities would be. And especially here at the blue line, you can see several really good buying opportunities. But then we had a break. Here's the support break on the 16th of January 2018. We had an attempt to take out the resistance, support resistance at 13,110. That did not work, and we continued lower, and now we have an outright bear market in Bitcoin, which started on February 4th, 2018. So traders will now, traders that think similar to what I do will now short this instrument. ETH, Ethereum versus US dollar, same thing. Basically, bearish security. You can see a support break on the 14th of March, and then you can short immediately with a very nice 40% gain if you did that, because it dropped from 651 to like 368. Litecoin, LTC, USD, same thing. Very similar patterns, all cryptos. Here's the support break and bear market on the 1st of February 2018. It's just a beautiful shorting opportunity here on the 20th of February. So the 1st of February, and then we had the 20th of February, just incredible shorting opportunity. But here's another one that worked out really well on the 17th of March. It was almost 30% gain. Finally, XRP versus USD, also known as Ripple. Also bearish security. This one started in the bear market even earlier in January 2018, and it still continues. You can see several providers. Here's Riot blockchain at fresh lows. I think DPW also is some sort of a crypto leveraged play. This one, DPW, for example, broke down on the 8th of January, and from here on we can just short it. Riot blockchain also broke down on the 16th of January, and then again we can short it from there. Alright, if you have any questions, please send them in to MasterChartsTrading.com. Click on alerts and indicators, and then you can sign up for monthly or yearly, or you can just get alerts only and access to my various training content. There's a lot of training videos here in the training section. So again, if you have any questions, please send them in, and thanks for watching. Have another great trading week. Bye bye.